Welcome to Markets Now. I'm Michelle Rook with Shawn Hackett with Hackett Financial Advisors. Livestock futures ending mixed on Wednesday. Grains down across the board for the third day. And Shawn, let's talk about this. How much of the pressure the last 3 days has been tied to outside markets like the dollar?
I think it's mostly due to that. I always say it's not so much what the dollar value is necessarily, it's the rate of change of movement. When the dollar is rising fast, like we've seen, where it's going up straight up, the market just isn't able to adjust. And it's a huge headwind that only can be overcome if you have extreme weather, which we don't have, or some type of extreme tightness in the market, which we don't have. So it's really, really hard for any US-based commodity to go up at a time when we have a parabolic rise in the dollar. And so that's something that we need to just keep watching for when that US dollar stops doing that and starts to trend sideways. That would be a point where some of this demand that your export demand or some of these other fundamentals that are actually encouraging might have an impact to price.
And you think the higher dollar is basically the Trump effect?
It's absolutely the Trump effect. It's the same thing that happened the last time he became president. Everyone figuring if you raise tariffs, it's going to try to force capital and investment back into the country, increase manufacturing into the country. And if you're doing that and you're attracting that capital that has to sell the currencies overseas and it has to buy the US dollar, that's what the speculators are doing right now. They're betting that that is what's going to happen. I'd be a little careful, though, because it's unlikely he's going to be able to move his agenda as quickly as the market is perceiving, like what happened last time. And a lot of these bets that are being made may have to be unwound in the first quarter, which could create some opportunities here from some of the distortions that we've been seeing.
So how volatile do you think it could get as a result?
I think it could be as volatile as it was last time. I mean, if you remember, Michelle, last time, you wake up in the morning and soybeans would be up 30 or 35 cents. And by the end of the day, it was down 20 or 25 cents. I think we're going to be looking at a lot of whipsaw. If I'm sitting here as a producer, as an end user, what do I do in a situation with such volatility and such uncertainty? I want to be opportunistic to take advantage of upside if I'm a producer to sell, and take advantage of downside volatility if I'm an end user to buy, until we have a better handle on what the actual rules of engagement are going to be.
Right. Well, we have had political appointments or nominations already announced. Lighthizer for USTR, you've got Zeldin in EPA. The market's already been reacting to some of this, right?
Absolutely. I mean, we know what Lighthizer did last time, and we know the policies of some of these appointees and what they're favoring and what they want to do. And so the market's going to try to project that appointment with what that means for policy and try to determine if it's going to alter supply and demand in a major way.
How do you think the tariff thing is going to play out here? Are tariffs going to be used as a leverage tool to get a deal with China or other countries, or are they going to be used to fund the government?
I believe Trump would prefer to use wild tariff threats to negotiate a better trade deal, help the farmer out in that regard, than to actually impose significant increases in tariffs. He may ultimately decide that's what he's going to do, but I think he's going to try his very, very best to use it as a negotiating tool before he goes and creates that situation, which could once again put the U.S. ag industry in arrears.
And what about demand? What happens with that? We saw another over 27 million bushels of corn export flash business this morning, but it doesn't seem like this export business is really moving the market upward. So what's going on with that? And what do you expect here before Trump takes office in terms of export business?
Well, I think a lot of the market is thinking that some of this buying is front-running tariffs. So we're pulling a lot of future demand into the present on the fears over what tariffs would be. And if that's the case, then the demand that we're seeing is not sustainable, right? Meaning it's overinflated. And the minute that Trump gets into office, that demand is going to quickly erode. That's the fear in the market. And probably, other than a strong dollar, one of the reasons that we're not seeing reaction, because I think the market doesn't think it's sustainable because it's a distortion over front-running a Trump tariff policy.
Yeah. Soybean oil is kind of got caught up in that political quagmire too, hasn't it?
It has. There's this thought that a Trump tariff policy could prevent imported vegetable oils from competing with bean oil, creating an increase for bean oil demand and helping U.S. demand for soybeans. At the same time, it appears the appointments that he's putting in are anti-alternative energy and biofuels. So a lot of mixed signals here about what all this really means. And certainly bean oil is definitely caught up with a big up and then all of a sudden kind of a deflating here in the last couple of days.
Do you think, from a weather perspective, that the soybean market is also maybe trying to price in better rains, better planting conditions in South America?
Well, we certainly have had a better go of it for rainfall here over the last 3 to 4 weeks. Dry weather is expected to come back later in this month. That won't be enough to change the current view that rains have been very good. What we would need to see is that dry weather carry over into the first half of December. But for right now, I definitely feel that some of the weather premium that we were trying to put on when we were at 10 and a half and 1060 is definitely going to stay off until or if we see that dry weather get more into that pod setting period in the month of December in Brazil.
It looks like wheat has done the same thing. Not that we had a lot of weather premium, but rains in HRW areas especially, and then also these higher ratings have kind of sunk that wheat market, haven't they?
Yeah, I mean, there was definitely some speculators that were buying this record dry September, October, and then all of a sudden, we just got all kinds of rainfall. They caught up with planting. The conditions dramatically improved, and then we're going to go into dormancy in pretty good shape. No question, there's some selling in the wheat market due to that, on top of some selling because of the dollar being strong.
So we made new lows for the move again here. How much more downside risk do you think we have there?
I mean, right now we're trading at the same price that we were in late 2023. It's a strong area of support. We can go a little bit lower. I think most of the strong dollar policy and most of the worry over the rains in the HRW areas, I believe, are pretty much fully priced in here. I would expect the market to start basing sideways, that most of the downside is behind us. If anything, we might see a technical bounce here in the marketplace pretty soon.
Yeah, we would be the most sensitive to the higher dollar for sure. Okay, cattle market. Kind of a mixed day here, but what do you sense? We kind of bounced off some support we needed to hold this week here on Monday. Do you see the market moving sideways now for a while, or where do we go?
Yeah, I really don't see, we're still stuck in this sideways trading wedge pattern that we've been in really since last fall. And right now we're at the upper end of the wedge. I just think we're just back and forth into the end of the year. I don't expect a big move up or down in the cattle market. Really, I think it's going to be pretty boring, pretty unexciting, and just not much to say until we get into the new year.
And what about hogs? We made new contract highs on Tuesday. We look like we're trying to consolidate a little bit here. Is the party over? Is this profit-taking hedge pressure? What's going on?
I mean, we had a huge rally. We've gotten into some really strong overhead resistance. I think we're starting to see some hedge pressure. I think that hedge pressure is going to get more aggressive. And I do think that this market is setting up for a more protracted decline, into the end of the year. So just looking at, for example, the April contract, it wouldn't surprise me if we could move back to the low 80s from where we are right now. And that would be a significant hit to a producer who doesn't take advantage of the current cash price and bring that money home on the farm. Given the volatility that we just mentioned that a Trump presidency is going to have for the foreseeable future, take advantage of those opportunities when it pencils out on your farm balance sheet, which I believe the current hog price does.
Yeah, it was an impressive contra-seasonal rally for sure. All right, good advice. Thanks so much. Shawn Hackett with Hackett Financial Advisors. That is Markets Now.